it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As you can see today on Wednesday, price sold off. So we're still distributing lower. We can see it recovers all the gains that it gave up yesterday. So Tuesday sold down all the way down here and pulled back up and closed up there. But here Wednesday comes and fills in that gain that it lost here, or the ground that it lost. Wednesday, as you can see, is going down. So that only means for inversely correlated pairs, it should be doing what? It should be going up. So let's take a look at the DXY real quick. DXY, what is that? Going back up. And where is it reaching now? March's opening price. Whoa. Is that a coincidence that we were all seeing all the pairs change trends during this month? Now, this is a really difficult month, at least the one that we experienced this month. This was interesting. Complete U-turn. A lot of people weren't probably expecting this, but if you're tracking this day to day, you are on par with what the market is doing. There's no excuse because you're tracking it day to day. You're here getting those daily updates from me, Deontay. You're seeing it day to day, in and out. We said that EU was most likely going to switch back bearish. How did we know that? Because we were consistent with watching the daily chart. The daily chart is really influential. A lot of people would tell me and argue and debate and say, why look at the daily chart? It doesn't mean anything. It does mean something. Whether that's short term, intermediate, or long term, it's going to eventually follow the higher time frame trend every single time. The daily, weekly, and monthly are king. We knew that it was going to switch back bearish right here. Swing low broken, that is bearish momentum. Now, even if we didn't get the lower swing high to form, just this idea or just this natural price indication, no indicators, remember that. There's no indicators that I use. It's all natural price action indication. The fact that this swing low here was broken told me, bearish momentum. I could have went short the following days at any day and just held for lower price action. But would I inform other people to be more confident, to have a lot more protection and take on less risk? Wait for the lower swing high to form. But if you're someone that is a risk taker and very aggressive, if you see that bearish momentum come into play, you could look to go short after that bearish momentum, right? That change in trend here. Because we failed to break what? This swing high. We got a lower swing high instead. That's also a price indication there, a natural price indication. So though I was waiting for something like this is also something other folks could be indicating to themselves like, something's not right here. We printed a lower swing high and we also broke a swing low. Now we got a lower swing high here compared to this one and this one. Technically, this is the highest. This is the higher swing high before everything started to decline. Odds are I would like to see price reach for the previous daily low. I know we got some Fed news. We got the interest rate for the Feds, and we got the Fed press conference later today in the PM session. New York session has been choppy, but if you look intraday, there was an opportunity to get short here. Let's take a look. It's looking at the London session, and there's probably still an opportunity here in the New York session right now forming, but I do think because there's news happening, that's why we're getting this choppiness here right now. It's been consolidating since 5 p.m., 5 a.m., correction. Consolidating all the way throughout New York session. But London session, very volatile. Willingness to move. Notice how we have a dead zone here. Price raised this high, the highest high at midnight. Raised this swing high here. It also even raised what? The Asian session high. So these are conditions of high probability selling scenarios. If you are bearish for the day and you see prices above the Asian session high, odds are you will find a good selling opportunity above the Asian high. Now, many people may ask how high above the Asian session high. Maybe that's one standard deviation. Maybe that's two. You can see here it's not even one standard deviation above the Asian session high, which is why I don't use standard deviations. I just truly didn't see the feasibility to the standard deviations or the central bank dealers range standard deviations. Maybe for projections, but to understand where the Judas swing was going to occur, I didn't find it to be feasible. I just knew at said point when it got above the Asian session high, when it got above London opening price, when it got above midnight opening price, all premium conditions, we were going to find a selling opportunity if we are correct and our bias stands strong for a bearish sell-off. Let's take a look at what happens here right when we break those highs. Notice too, what's intact? The Asian session low. So it could be a very short-term draw on liquidity. We want to just get back down to the Asian session low. Asian session high ran. Let's try to see if price can get back down here if we're looking to go short. From the 15-minute time frame, we rated 15-minute swing high, the highest high during the Asian lunch, and the Asian session high. Double tops here, clean highs. 1-minute time frame. What are we looking for? A fair value gap that runs a swing low, and that swing low is inside or resides inside the fair value gap. I'll say that again. We're looking for the entry technique of a fair value gap that runs a swing low, and the swing low resides inside the fair value gap. Let's play it forward. Stop. Now, I'm not concerned about any other fair value gap that forms after breaking these buy side liquidity pools that we're framing here. I'm really concerned about the one that looks just like this. Here to here. There it is. Where's this entry technique happening again to? Above 2 a.m.'s opening price. Somebody asked me and said in the comments that the kill zone starts at 4 a.m. I'm not sure where people are getting that source information from, but it doesn't start at 2 a.m. I know most people either started at 1 a.m. because they want to get that extra hour in that window to scan to see if there's any setups there, or generally 2 a.m. And I've always been sticking to 2 a.m. And you can see how that entry is in a premium territory. Where else, you can see price raids, buy stops. So we have the sponsorship behind our trade. The sponsorship is we've got all the retail traders to go long. We got everybody to go like this. Yup, break retest. Let me see something like that to happen. Instead, they're met with this distribution. And every single time, retail traders probably try to get their hopes up, try to go long. And what are they doing? Just digging into their equity a lot more, blowing their account, risking, a lot more than they should when they come to the realization that they've got it wrong. You got to come to that realization really quick. Don't take too long. If you're in a losing trade, cut the losses, move on. You got tomorrow. You got the next kill zone. Reevaluate. Don't hold on to the losers long. The most successful traders that they tell about in the world, they tend to cut their losers really early. But the entry and a premium territory. If we were to play this all the way through to the New York session, just to look at what it's doing right now, right? Because people may want to have context to see what's happening live. Consolidating. Choppy. A lot of the pairs right now are very choppy. NU, EU, GU, AU, UCAD, USWISI, they're all choppy right now. They're moving back and forth. It's all because of that news later today. But if you were to take a look at this, we're on a 15. No, we're not on a 15. Let's go on a 15-minute time frame. Did we run any dead zone between here so far? We ran this and we ran this. So we have buy side liquidity pools ran above these 15-minute swing highs here and here. Keep up. I know it's a lot. When price runs those buy sides, right? So this one here. So it ran that one here. That's the first one that it ran. Can we see that entry technique? Yes, we can. It's right here. You can see this one will put us in some drawdown. So let's run it back. And that's where it forms. It runs that buy side liquidity pool right there. And then it forms this formation here. Fair value gap with the swing point in here. A lot of people like to look back and be like, why did you not pick this fair value gap? Or why not this one, Deontay? Either I missed it myself because I'm a human being. I'm not perfect. I missed it myself. Or it's a fair value gap that doesn't look like this, right? The sequence doesn't look like this. This is the line or the fingerprint that I'm looking for. I'm looking for price to trade up into that and then go short. Notice, where's the entry point happening too? Where is this entry technique forming? Where is it forming again? Above 7 a.m.'s opening price. Is that a coincidence? No. Why is the algorithm printing these kind of structures above in this level? It's because it's most likely trying to find a selling opportunity, or it's gearing itself to potentially go short. Not every setup is going to be perfect, because even though you get the entry technique, you can still have a losing trade. We do get in some drawdown right now, and this is where we are right now. But if this is what it would look like: short, 15 pips, 15 pips. Something along the lines like this is what you're looking for, a one-to-one scenario. Will price target the previous daily low? Possibly. See where the previous daily low is. It's over here. It's close to price. So we could expect price to potentially draw to that previous daily low. It's most likely going to happen in the afternoon because of the news events, like I said. Rate decision, FOMC, and the Fed press conference. So be careful, be wary. Hopefully this is insightful. Look at Japanese yen. Wait, before we go, look at Japanese yen. Look at this. The yen had a bad day after they raised interest rates. Where is it at? I got the new contract came out. That's why. Here we go. Look at it. Sold off. Where's March's opening price? Here. Look at that. Complete U-turn. Do you guys see that? Inverse to DXY. So now you know yen is completely inverse to DXY. Complete U-turn. It's going up. Everybody had faith that Japanese yen was going to gain strength and continue trending. I did too. But what did I start to notice? I started to notice other pairs were making bearish momentum shifts. So that made me speculate, okay, yen is probably going to sell off too. And you can see it happens here. Look at that. Breaks a swing low. We don't get any lower swing high, and then price goes lower. But you can see how right there is the natural indication where it's going to most likely sell off. Peace.